Imagine that you are sitting in front of your computer, analyzing two companies that look almost identical. They have the same revenue, the same number of employees, and similar technology. But there is one hidden detail. One of them is already facing multi-million-dollar lawsuits for pollution, protests in front of its factories, and the risk of losing international contracts. The other one, on the contrary, is being courted by global funds, winning access to cheaper credit lines, and appearing in sustainability rankings. Now be honest, which one would you invest your money in? This is the essence of what we are going to explore today. Many people think of environmental compliance as nothing more than bureaucracy or an extra cost. But the smartest investors have already realized that behind these structures lies a hidden gold mine. Those who understand how it works can reduce risks, identify tomorrow's market leaders, and capture extraordinary returns. Get ready, because in the next few minutes I will open your mind to one of the most underestimated themes in today's financial markets: how to turn environmental compliance into a true investment advantage. So, what is environmental compliance? It means the set of practices, standards, internal controls, and policies that a company adopts to stay aligned with environmental laws and regulations, but also with voluntary global standards, such as sustainability certifications and ESG reporting. Here's the first big insight. Compliance is not only about following the law, it works as a passport to compete in markets that are becoming more demanding every year. Companies that embrace compliance gain access to cheaper lines of credit because their risk of fines and environmental crises is lower. They attract capital from institutional investors who are under pressure to allocate money into sustainable businesses. And they strengthen their brand because modern consumers prefer to buy from and support those who respect the planet. In other words, compliance is not a cost. It is a competitive advantage. Now let's look at why you, as an investor, should care about this right now. In the last 5 years, there has been an explosion of environmental regulations across the globe. In the United States, the SEC is demanding more detailed climate-related disclosures. In the European Union, the Carbon Border Adjustment Mechanism has begun taxing imports that do not meet environmental standards. In Asia, countries like Japan and South Korea are linking access to bank credit with sustainability goals. What does this mean for investors? It means that compliance is no longer optional. It has become a barrier to entry. And when barriers to entry rise, only the companies that adapt can survive and grow. Investors who can identify them early are usually the ones who earn the largest rewards. Let me give you a real example. Think back to Volkswagen in 2015, when the emissions scandal came to light. The company lost billions in market value in a matter of days simply because it ignored environmental standards. Many investors saw their wealth vanish. Now compare that with Tesla, which rode the green wave. Regardless of opinions on valuation, it is undeniable that Tesla's environmental positioning opened doors to government incentives, billions in investments, and global media attention. Do you see the contrast? While one company ignored compliance and destroyed value, the other used it as a catapult to attract investors and become a symbol of innovation. And here's a powerful insight. There are hundreds of smaller, lesser-known companies right now that are following this same path of positioning themselves as green leaders in their industries. Investors who find them before the broader market does can multiply their returns. So, how can you benefit from environmental compliance in practice? There are 3 main ways. First, resilient companies. Businesses that already comply with environmental standards are less likely to face lawsuits, export bans, or billion-dollar fines. That makes them safer long-term investments. Second, future market leaders. Companies that go beyond the law by innovating, creating recyclable products, reducing emissions, or investing in renewable energy gain preferential contracts and customer loyalty. Third, entire sectors that grow because of compliance. This is not only about individual companies. Entire industries are expanding because regulation is tightening. Think about carbon credits, recycling technologies, environmental monitoring, and clean energy. All of these exist and thrive because global rules are pushing them forward. And the tougher the rules, the bigger the growth opportunities for those who provide the solutions. If this type of analysis is opening your eyes and making you look at the market differently, take a second to subscribe to Investor School. Every week, I bring strategies and insights that can put you several steps ahead of the average investor. And believe me, being informed before the majority is one of the greatest advantages you can have in the financial world. Now let's get practical. How do you actually apply this in your portfolio? Start by studying ESG reports. Do not settle for vague promises. Look for companies with concrete goals such as carbon neutrality, recycling targets, and globally recognized certifications. Then, compare the cost of capital. Companies aligned with sustainability often raise funds at lower interest rates. That is a sign of trust from the market. Focus on environmental megatrends. Renewable energy, circular economy, waste reduction, carbon capture technologies, and green biotech are all areas that will directly benefit from stricter regulations. And if you want an easy way to diversify, look into green ETFs. These funds bring together companies that meet environmental standards, giving you exposure to this global trend without needing to pick only one stock. Here's an important warning that works like a mental trigger. Ignoring compliance is taking on an invisible risk. You might be buying a profitable company today, but tomorrow it could lose 40% of its value because it was caught violating environmental standards. On the other hand, if you use compliance as a filter, you already eliminate a huge part of that risk. It is like driving with insurance. You might never need it, but if something happens, you are protected. The truth is, the future of investing will be green, with or without you. Governments will tighten regulations, consumers will demand responsibility, and institutional investors will prioritize companies that respect the planet. So you have two choices. You can ignore environmental compliance and risk falling behind, or you can use it as a map of opportunities, pointing you toward the companies and sectors that will dominate the market over the next 10 or 20 years. The choice is yours. And never forget, the next giants of the market are already being shaped right now. Companies that seem small today may soon become global symbols of sustainability. The big question is, will you just be a spectator, or will you be one of the visionaries who believed early and reaped the biggest rewards? If you want to keep learning how to transform global trends into real investment returns, make sure to hit the like button, subscribe, and turn on notifications. At Investor School, every lesson is a chance to see the market in a way most people simply cannot.